the world often appears to hold its breath for a financial event, significant enough to alter the economic landscape for an entire region. That decisive moment may finally be upon us, emanating from a source long associated with geopolitical and economic uncertainty, Iraq. In a move that has captured the attention of currency watchers globally, Iraq's Central Monetary Authority has released a comprehensive and clearly articulated strategy intended to dramatically overhaul its national currency, the Iraqi Dinar, and in doing so, redefine the country's standing in the international financial arena. This is not the product of anonymous sources or market conjecture, but a definitive, detailed policy announcement that outlines the specific steps Iraq plans to take to strengthen, stabilize, and increase the global relevance of its currency. This structured revelation moves beyond past speculation, providing a verified plan for how the nation intends to proceed. We are now in a position to analyze the core components of this announcement, the 5 foundational actions, the 3-phase timeline for implementation, the implications for the dinar's market accessibility, and why the year 2025 is being highlighted as a potential watershed moment for the Iraqi economy. By examining the facts presented by the Central Bank of Iraq, CBI, we can gain a clear understanding of the new direction of Iraqi monetary policy. This level of official transparency is what has caused a significant buzz across the entire currency community, indicating a profound shift in how Iraq engages with global financial institutions. The week began like any other for Iraqi citizens tuning into their evening news. But the address that followed was anything but routine. The head of Iraq's central bank delivered what many are calling the most candid and explicit monetary policy update broadcast in over 2 decades. For years, a single critical question has driven the interest of analysts and investors. Would the dinar ever undergo a substantial upward adjustment in value, or a revaluation? Now the nation has received the first official confirmation that a calculated and comprehensive process is indeed underway to enhance the dinar's strength and acceptance on the international stage. While the governor deliberately avoided using the emotionally charged term revaluation, the substance of his message left no room for ambiguity. Iraq is preparing for a monumental transition in its national monetary framework, a transition set to have significant consequences for both its domestic markets and its position within the international system of exchanges. The plan articulated is divided into a series of clear and measurable commitments, providing a verifiable basis for the promised changes. The first and most strategically vital component of this roadmap centers on establishing new and formalized cooperative relationships with major international financial bodies. To achieve this, the Central Bank of Iraq has confirmed it is now actively collaborating with institutions such as the U.S. Federal Reserve, the Bank for International Settlements, BIS, and other key partners. This cooperation is aimed at fundamentally modernizing and aligning Iraq's entire financial infrastructure with global standards. The importance of this step cannot be overstated, as genuine international currency strength is inextricably linked to a country's integration into secure and trusted global banking networks. By making these collaborations public, Iraq is signaling its intent to re-enter global markets as a reliable player, backing its currency with a robust, internationally recognized financial framework. This confirmed engagement with top-tier international bodies represents a level of operational seriousness and commitment that far surpasses the basis for past rumors or speculative chatter. It demonstrates that the central bank's plan is rooted in practical, verifiable action rather than just abstract policy goals. The second major action detailed in the announcement focuses on eliminating long-standing monetary controls that have been in place since the post-2003 era. These restrictions limited the dinar's utility for foreign exchange, conversion, and use outside the country's borders. These limitations were originally implemented as temporary safeguards to protect the nation's financial system during a prolonged period of war, political instability, and national reconstruction. However, with Iraq's economy now achieving a greater degree of stability and its banking sector having undergone significant modernization, these historical barriers are being systematically removed. The lifting of these restrictions is a necessary foundational step designed to enable the dinar to circulate more freely in global currency markets. In essence, this move opens the international door for the dinar to actively trade again, a crucial prerequisite for any currency aiming to see an increase in its external value The removal of these domestic controls is not just a technical policy shift. It is a clear and powerful financial signal to the world that Iraq is preparing for its currency to be a legitimate component of the global financial system. The third noteworthy revelation during the central bank governor's broadcast was a visual presentation of entirely new Iraqi banknotes. These new physical notes, it was explained, are being manufactured with state-of-the-art security features, placing them on par with the anti-counterfeiting measures used in major global currencies like the US dollar. The euro and the British pound, the security features include advanced holograms, sophisticated color-shifting inks, and specialized micro-printing technology, all designed to make counterfeiting exceedingly difficult. The investment of substantial resources required to produce a new currency with such high-level security features suggests a clear belief on the part of the authorities that the dinar is poised to assume a more prominent and more valuable role in both the domestic and international economy. The physical preparation of the currency for global circulation strongly indicates that Iraq's plan for strengthening the dinar is being implemented not just on paper, but tangibly and physically, a fact that many financial analysts regard as a strong indicator of impending change. The fourth and perhaps most innovative part of the central bank's announcement confirmed that the Iraqi dinar will be partially supported by the country's oil revenues. This move positions the dinar under a form of commodity-backed system, a structure that is rarely observed in contemporary global economies. Given that Iraq possesses some of the world's largest proven oil reserves, this backing provides the dinar with a fundamental basis of real-world value. Unlike purely fiat currencies, which rely solely on the collective trust in the issuing government, a commodity-backed structure offers a measurable physical asset underpinning the currency's strength. The central bank specified that this commodity-backed framework is projected to be fully operational by the end of 2025 for market observers. This signifies that the dinar could soon be anchored by one of the planet's most consistently valuable natural resources, a development that is expected to drastically reshape its market dynamics and overall resilience. This strategic use of a national resource as a currency stabilizer is a bold step that aims to instill greater confidence in the dinar's long-term sustainability and value. The fifth critical step detailed in Iraq's official roadmap involves significantly increasing the nation's international reserves. According to the central bank's recent reporting, these reserves have seen a substantial increase, reportedly rising by over 40% in the preceding year, and include a diversified portfolio of assets such as gold holdings, various foreign currencies, and assets held under the International Monetary Fund's Special Drawing Rights (SDRs) framework. The systematic accumulation of strong reserves is crucial because it serves as a powerful instrument for building broad investor confidence. The larger the reserves held by a central bank, the greater the perceived stability of its national currency, and the more effective the bank is at managing inflation and maintaining desired exchange rates. In essence, Iraq is strategically accumulating a significant buffer of financial security before moving forward with its broader currency initiative. These reserves function as an essential safety net, designed to ensure that any future strengthening of the dinar is both stable and economically sustainable over an extended period, preventing sudden spikes or market disruptions. Accompanying the 5 steps, the central bank governor introduced a definitive three-phase timeline for the implementation of these monetary reforms. Phase 1, which is already actively underway, is concentrated on reinforcing and strengthening the foundational financial infrastructure. This includes significant upgrades to digital systems, expanding electronic banking services, and building out stronger correspondent relationships with international banks around the world. Phase 2 of the official roadmap is scheduled for mid-2025 and is dedicated to the introduction of new exchange mechanisms that will play a critical role in establishing and determining the dinar's international value in the currency markets. Finally, Phase 3, which is anticipated to be in effect by late 2025, is the critical milestone that will see the formal establishment of the new international exchange rate for the Iraqi dinar on global financial markets. This public release of a detailed, step-by-step timeline, complete with clear and trackable milestones, is an unprecedented level of transparency for Iraq and a major factor in restoring confidence among the international community. For those holding the Iraqi dinar, This structured timeline represents a pivotal shift away from the years of speculative rumors about an instantaneous, overnight revaluation. The central bank has explicitly communicated that its strategy will be gradual, carefully controlled, and methodical. The expectation is for a steady, measurable appreciation over time, rather than a sudden, unpredictable surge in value. This measured approach is vital for preventing economic shocks, allowing both domestic businesses and international markets sufficient time to adjust to the new currency reality. For those who have maintained their interest in the dinar, this method favors sustained, long-term growth over temporary, volatile spikes, and critically, it reduces the risk of inflation and broader financial instability. The central bank also directly addressed one of the most pressing concerns for investors, the practical accessibility for currency exchange. The governor confirmed that all current dinar holders will be able to exchange their currency through a network of authorized dealers, which will operate both inside Iraq and internationally. Work has already begun to expand the number of verified exchange centers across multiple foreign countries. This measure resolves a persistent concern among those who worried about the logistics of redeeming or trading their dinars if the currency did achieve a significant increase in value. By establishing a secure and transparent network for exchange, Iraq is actively signaling its intention to manage this transition as a legitimate, globally recognized event, ensuring it is a worldwide transition and not merely a domestic policy upgrade. Beyond the direct currency reform, the broader Iraqi leadership has emphasized that achieving and maintaining overall economic stability is paramount to sustaining the dinar's future value. To this end, the government is committed to a vigorous strategy of economic diversification, which includes substantial investment in sectors such as agriculture, manufacturing, and technology, with the aim of reducing the economy's traditional over-reliance on oil revenues. This diversification is a key structural strength for the dinar because it broadens the nation's financial base across multiple different industries. A more diversified economy offers greater resilience against fluctuations in global oil prices, a significant risk factor that Iraq has historically faced. As these non-oil sectors expand and contribute more to the national economy, they will provide a wider financial base to support the currency, leading to a more balanced and sustainable national economic model. Inflation control was another significant topic of the national broadcast. The central bank proudly reported that inflation has been successfully managed and maintained below an annual rate of 3%, a considerable achievement for a developing economy currently undergoing such extensive structural reform. The control of inflation is essential to ensure that as the dinar's value strengthens, the cost of living and the prices of goods and services remain stable. The bank's strict policy on inflation is specifically designed to mitigate the risks of unpredictable shifts in the cost of living that can accompany sudden currency appreciation. A stable, low inflation rate helps to build a high level of trust, both among the Iraqi populace and with international investors, signaling that the country is prepared to manage this complex transition with professional long-term economic foresight. Naturally, an announcement of this magnitude is met with some degree of healthy skepticism, as longtime observers recall previous promises that did not fully materialize. However, there are three critical factors that clearly distinguish this announcement from past rumors. Firstly, the information came directly from the central bank governor himself, delivered on national television as opposed to unofficial leaks or unverified sources. Secondly, the provided roadmap contains specific, actionable steps and a clear, verifiable timeline that can be independently tracked and confirmed by the international community. Thirdly, the publicly announced partnerships with major global financial institutions can also be verified through observable international cooperation efforts. These three factors combine to make this announcement the most credible and actionable update in Iraq's recent monetary history. It remains essential for all market observers to maintain a grounded and realistic perspective. Currency reform is an inherently complex process involving countless moving parts, from domestic banking readiness and international regulatory hurdles to the unpredictability of global oil prices and geopolitical events, all of which can potentially influence Iraq's published timeline. Experts strongly advise against expecting a sudden, overnight realization of substantial profit. The genuine opportunity inherent in this plan lies in closely monitoring the gradual, sustainable appreciation that is deemed far more valuable than short-lived, temporary spikes. The explicit message from the Central Bank of Iraq is centered on the guiding principles of patience, structure, and stability throughout this multi-phase process. The clarity provided by this roadmap offers the community a reliable set of benchmarks to follow as the process unfolds through 2025, a crucial yet often overlooked component of the central bank's initiative is the rapid acceleration of digital banking integration. Iraq is aggressively expanding its electronic payment systems and mobile banking capabilities, which are non-negotiable foundations for modern currency operations. These digital upgrades are designed to facilitate real-time tracking, ensure transparent transactions, and enable faster international money transfers. This digital modernization serves as the key bridge connecting Iraq's internal financial system directly to the global markets, enabling smoother, more efficient exchange rate management and international settlements. In many respects, this digital transformation is just as vital as the introduction of the new currency notes themselves, as it represents the mechanism by which Iraq's internal financial growth can seamlessly connect with the broader world economy. The central bank's overall communication strategy has also undergone a significant evolution, shifting from historically secretive decision-making to a new policy of public transparency. The leadership is committing to regular press updates, televised statements, and the release of online reports to keep both citizens and the international investor community well informed. This commitment to openness is a fundamental tool for building confidence, both locally and globally. For years, a lack of clear, consistent communication was one of the greatest challenges facing Iraq's economic narrative, fueling rumors and widespread misinformation. By now openly and publicly sharing a detailed, structured plan, Iraq is strategically positioning itself as a credible and trustworthy financial actor that is actively working to earn the necessary international trust. This represents a major cultural shift in the country's governance, a shift absolutely essential for the dinar's successful global acceptance. Another important development within the reform plan is the strategy for international reserves diversification. The central bank is focused not just on increasing the sheer quantity of its reserves, but also on strategically improving their composition. This involves carefully balancing its holdings of gold, various foreign currencies, and IMF assets to proactively shield the national economy against global financial volatility. This deliberate diversification strategy makes the dinar significantly less vulnerable to external global shocks. For instance, if there is a sharp decline in oil prices or a major fluctuation in a particular foreign currency, Iraq's balanced reserve mix provides a crucial financial cushion. This measured approach mirrors the reserve strategies employed by major world economies, indicating that Iraq is diligently aligning its financial policies with established international best practices for long-term economic stability. The full implications of these comprehensive reforms extend far beyond the mere adjustment of a currency's value. They signal Iraq's burgeoning confidence and increased independence on the global stage. For the past 2 decades, Iraq's economy was often forced into a reactive stance, constantly responding to sanctions, crises, and reconstruction challenges. Now, the nation is actively becoming proactive, deliberately shaping its own future through structured, self-determined policy choices. The central bank's new roadmap is fundamentally about more than just the dinar. It is about the restoration of Iraq's financial sovereignty and giving the national economy the respect it deserves after years of hardship and political turmoil. As this structured plan unfolds, Iraq has the potential to serve as a significant case study for how developing nations can successfully transition into modern, stable, and transparent financial systems. For those watching this story unfold, it provides the first structured, verifiable, and official rationale for a cautious optimism in many years. It confirms that Iraq is moving past merely discussing change and is now actively implementing it, step by step, with a high degree of public accountability. While it is important to remain realistic that success will not be immediate and that timelines can shift, this roadmap provides a long-needed element of clarity for the entire currency community. You now have a clear understanding of the key indicators to watch for: the distribution of new high-security banknotes, ongoing public updates regarding the status of international reserves, and most crucially, the mid-2025 phase when the new exchange mechanisms are scheduled for launch. Each of these milestones will serve as a concrete measure of tangible progress. A stable and strengthened national currency is an outcome that ultimately benefits all stakeholders. Not only those who are following the market, but most significantly, the Iraqi people themselves. A stronger dinar means an increase in national purchasing power, greater overall economic stability, and a renewed sense of national pride. Whether you are tracking these developments from Baghdad or from any point across the globe, this is a financial story of immense consequence. The announcement from Iraq's central bank stands as the most detailed and credible plan yet seen regarding the dinar's future. The entire framework, the partnerships, the steps, and the explicit timeline all point toward a single conclusion. Iraq is actively preparing to fully reintroduce its currency to the world stage. The upcoming 12 months are expected to be a critical period for implementation, and the structural changes that are seen could reverberate across regional and global financial markets for years to come. I am tracking all of these events for you right here on the Dinar Daily.